Hey there, it's Mike Wise, CMG Home Loans, and this is your weekly mortgage update. A lot of stuff going on this week. Let me give you a quick update on what's going on. So home sales, they actually fell year over year here. I'll show you the numbers. And then mortgage rates predictions. I'm going to go into some of the predictions. In fact, let's get right into it. So Redfin is the high side of 6.8, and NAR is at 5.8%. Everything else is in between. Where do I think rates are going to end up? I think they're going to be right around 6.375, 6.5% for the year. So I don't think that interest rates are going to do too much more than that in 2025 at this point in time, unless something else comes out. One of the things that kind of is impacting that is the CBO, the Congressional Budget Office. They released their budget and economic outlook for 2025 to 2035. Why is that a big deal? Well, basically, their debt is going to go up by a big increase of 79% over the next 10 years. Again, why is this a big deal? Well, there's going to be more debt. How do we pay for that debt as a country? Well, what we do is we issue bonds. When you issue bonds, that's us investing in the bonds that the Treasury produces, and that's how this debt gets paid. And so over the years, the Treasuries get paid back to us, and that's where we earn some interest on those incomes. Why does that make a difference? Well, the more treasuries that are issued, the pricing on those things are going to get lower and lower. So there's not going to be a huge yield on those treasuries. Well, at the end of the day, there's a supply and demand issue, and the interest rates are going to stay higher because there's so many bonds out there that they're going to wait for prices to go up before we buy into those treasuries. So that's kind of the issue with the CBO at this point in time. Here's the home sales. Home sales in 2024, they fell to the lowest levels in nearly 30 years. You can see this graph here. It's pretty much the same as last year. But at the end of the day, you can see that, over the last 30 years, this is the lowest point here for the home sales. 2024, just 4.06 million home sales for the year. So the good news here is that we're at the low levels for the next 30 or the last 30 years. If you look at the rebound after that, we do have some good years after that ahead of us to show that the home sales are, they will get better over the coming years. But the existing home sales, they fell 0.7% in 2024 to that 4.6 million. The national median existing home price in December was $404,000. That's down from $426,000. Again, that's a national number, right? That's not California. And at the end of the day, when you look at it, it's volatile interest rates, the interest rates higher, and a housing shortage, which is actually keeping the market very, very, as far as the prices, it's keeping the market higher on the prices. Now, one of the things I want to show you on this is Zillow. They see a deficit of 4.5 million homes in the U.S. market. Again, this is going to be the driving force right now that keeping prices high in the U.S. because there's not enough houses out there. So if you can afford to buy a house now, even with the interest rates with where they are, because it is going to get better over time. The interest rates, that is, and when you can refinance those rates into a lower payment later on in the next year or so. I wanted to give you an update on national disasters. Obviously, the fires are going on right now, and there's a couple different options. One, borrowers can pause their payments for up to a year through forbearance. Forbearance is available for the federally backed loans, so that's Fannie Mae, Freddie Mac, FHA, VA, and some private loans. Okay, not all private loans, private banks will allow that, but you should talk to your lender about a forbearance agreement if your house is affected by any of the natural disasters. So And then you can basically they can be repaid by lump sums, extended loan terms, or loan modifications to get those kind of forbearances paid back. I wanted to talk to you again about the all-in-one loan. I'm going to go over this more and more as we go on through the year. The all-in-one loan, the beauty of this loan is that we give you a line of credit and a mortgage with your bank account. So it's all in one, and every time you deposit money into your checking account, it automatically goes over to your loan and pays down your loan balance so that you're paying less interest. And if you pay less interest every month, you do that month in and month out, you're going to pay off your loan in a shorter amount of time, and you're going to save a ton of interest on your loan. So the all-in-one loan, it's a beautiful loan that you can utilize on your primary residence, on your investment property, or second home. So interest rates, you can see here, this is the pricing on the Treasury here. I'm going to go over the interest rates here in just a hot second, but this is, you can see that we took a deep, kind of a dip in the prices here on the loans. Oops, let me get you back to that screen. So market overview, and here we are. So you can see here that the prices, they got worse. Interest rates went up on the 30-year fixed rate loans. They got better over a week ago, and they've kind of stayed right in that range there for that week there, right? So they've been basically staying the last week where they are from last week to where they are now. It is basically not changed. The yield on the 10-year Treasury, that actually came down. Let's look at a little bit longer period of time. So here's a 3-month look at it. And you can see the yield went up, and it kept on going up until last week. It started to come back down, and we're down right now at the 4.62 level on the 10-year yield. So what does that do for interest rates and on the mortgages? We're right at 7.12% on a 30-year fixed rate loan. FHA loan, 6.5%. So last week they were slightly lower than that. But they've gone up just a little bit, and I expect the interest rates probably stay the same here over the next couple of weeks. So at the end of the day, mortgage rates 7%, and not going too much anywhere fast at this point in time. This is Mike Wise with your weekly mortgage update. I will be around all weekend. If you want, give me a call, shoot me a text, and I will see you next week.